Good morning, everyone, and welcome to today's webinar. My name is Alex Paul from InvestorStream, and I'll be your host today. This morning, we have Kalina Power's Chairman, Stephen White, Managing Director, Ross MacLachlan, and Executive Director, Jeffry Myers, who will conduct a brief presentation and then participate in a Q&A session. Please feel free to send in your questions via the chat platform in the question pane in the GoToWebinar control panel, or simply email them to me at alex@investorstream.com.au. Many of you have already taken that route to email me questions, and really thank you for your proactivity in that regard. You can also download a copy of the presentation by navigating to the handouts pane in the GoToWebinar control panel. I understand the presentation has also been lodged on the ASX. And finally, a copy of the webinar will also be available on Kalina Power's website and social media platforms later today. But for now, I'd like to throw it over to Stephen to kick things off for us. Stephen, the floor is yours.
And thank you. And before we actually get into the main part of the presentation, I'd just like to introduce myself. My background has been 30 years working in the energy infrastructure business in North America. The last 15 of my full-time working career as CEO of Fort Chicago Energy Partners and Verison Inc. Under my stewardship, we developed large-scale energy assets such as power plants, pipelines, and natural gas processing and storage facilities. We were an early adopter of waste heat recovery power generation facilities using a competitor's technology, capturing waste heat from compressor stations on our main gas pipeline. It was at this time that I was introduced to Ross MacLachlan and Jeffry Myers. We undertook a number of very successful power project developments efforts together. I recently reconnected with Ross, and he asked me to join Kalina as an executive advisor working on the projects in Alberta, and he further asked me to join the board of Kalina this summer, and to expand my role as the chairman of the board and non-executive chairman. After some due diligence, I joined the board September the 1st. I see my role as bringing independence to the role of chairman and structure to the company's board and committees. I have a background in finance and accounting and have taken on the role of chairman of the audit committee, as well as chairman of the nomination committee and a member of the remuneration committee. I'm very excited about joining the board of Kalina, but I'm still getting up to speed with the activities outside of Alberta. I strongly believe in the decarbonisation of the generation of electricity and see an exciting future for the cleaner technologies. I also see challenges, the most critical being the securing of funding to develop the large array of projects that Kalina has under development. I believe that the experience that myself, Jeff, and Ross have in developing, financing, constructing, and operating large-scale power facilities will bear fruit for Kalina in the new year. And I hope to provide updates on these activities in the future. Now, talking to the rest of the board, Peter Littlewood, I think needs no introduction to many of you. Peter has long experience in operating in the Asia-Pacific region, particularly in China. Malcolm Jacques, who's been an independent technical advisor and board member for some time, has a very, very strong and deep understanding of the technologies. And Tim Horgan, who's a lawyer and has been involved with this company, and I think also doesn't need much introduction. The rest of the team in Alberta, as I said earlier, that many of these people have worked for me previously and worked with Jeffry Myers as well. Ken Spinner, Julia Siglione, and Jeff Scott all came through Pristine Power, and I think they're an excellent team. One of the best I think you could put together in Alberta doing these types of power development projects. Bob Racine has joined us earlier, about a year ago, I guess, and he is tasked with developing our Alberta projects. Kevin Wallace joined us some months ago after the unfortunate passing of Mark Moroney about Christmas time last year, and we did lose a bit of time with that change, and unfortunately, as I said, Mark passed away over the holiday period a year ago. Now, I will turn the presentation over to both of Ross and Jeff to run through the projects here in Alberta. And with that, over to you, Ross.
We're going to walk through a presentation outline with you today that covers a couple of key things. Of course, we're going to touch base about Kalina a little bit. There are some attendees on this web conference that this will be their first time to hear, but many of you, of course, know the story about Kalina. But we really want to get to the punchline here today and walk you through this really unprecedented move on legislation and regulation that's taking place in Canada, and really, frankly, even in North America more generally, but specifically how Canada's roadmap to net zero economy in 2050 is going to have a major impact on the implications and opportunities for Kalina's project development efforts in Alberta. And we want to specifically speak to Saddle Hills, and we want to specifically speak to something that's very big and very new, which relates to these major power plants that utilize carbon capture and sequestration. For the next slide. Next slide, please. Everyone knows that we have a tremendous technology that offers superior emissions technology over our competition, and we have a substantial intellectual property portfolio in the sector. And we have been laying the groundwork for international deployment of the technology on an industrial scale. Last year, we talked about the work that we're doing that is underway now with Baker Hughes and our views of establishing a really successful supply chain and partners of supply chain in order to be able to deploy the technology on an international scale. Central to our mission statement that we've mentioned several times along the way for the last year or two, our mission statement has been to establish a profitable business in Alberta that will serve as a platform to deploy the Kalina cycle technology to international markets and become a major player in this massive multi-billion-dollar economy for waste heat recovery that the Kalina cycle represents. One step that is going to, I think, have a major impact on that is what we'll be talking to you about today, and it's a major near-term value driver on the power projects that we're doing and developing in Alberta. Next slide, please. So there's a few things which are important to note because some of the questions that have come in already, I just want to make sure that people understand this very clearly. One of the things that Canada did was late in 2021, and well established in 2022, was establish the carbon tax. Now, this carbon tax, when it came out, was heralded as being almost excessive, perhaps the most progressive in the world, but it's a very, very progressive carbon tax, which adds to the existing carbon tax, what at the time was $50 a ton. It's now $65 a ton, and it will increase to $170 a ton by 2030, and thereafter it gets modified slightly to around $175. This in itself is a major development by a Western developing country that has such an energy intensive industry such as Canada. This is going to make a major, major difference, and it really turns upside down and has a major impact on the entire infrastructure and the inventory of power generating assets in the country. Effectively, what it does is it will increase prices for electricity as the economy transitions to widely deployed renewables. It effectively eliminates coal-fired generation. Coal-fired generation cannot compete and cannot work with carbon taxes at that level. And it also, frankly, phases out any of the inefficient gas-fired generation that exists today in the inventory. That is in place today. That was challenged at the Supreme Court by several of the different provinces, and it was defeated and was upheld rather by the Supreme Court. So that is in place today with no further changes. The second thing, which was a massive move, was in the 2022 budget, the government passed through a 50% refundable investment tax credit for the capital cost of carbon capture and sequestration. Effectively, what that says is if you were to add carbon capture and sequestration technology packages on the back of a power plant, then all of that investment that relates to that expenditure would receive a refundable investment tax credit. That's a major, major and significant move because it suddenly makes carbon capture and sequestration affordable. Two reasons. It avoids the $175 carbon tax because you've removed all the carbon, And the next reason is because you make the cost of those projects cost effective with this refundable investment tax credit of up to 50%. Now, the new thing which is pending, those two regulations or those two legislative pieces, which are in fact the carbon tax and the investment tax credit, are one thing. The details get sorted out, and they're really, really quite amazingly progressive, but they're also very, very important to note that the Canada Clean Energy Regulation comes out with a framework to deploy renewables throughout the economy on a major scale. And it also includes in that plan that they've drafted the utilization of gas-fired power generation in this transition. Here's what's important. Prior to 2035, fossil fuel power must financially abate, meaning they have to pay the carbon tax for 100% of the emissions that they have. But after 2035, regardless of whether you're able to pay for that carbon tax, they don't want those assets around. And effectively what they're going to say is you must shut down. And what that is going to mean is a major change in the entire infrastructure makeup of power generation in Canada. Now, this clean electricity regulation has been passed through for comment throughout the entire course of 2022, and it is currently being published in late 22, I think here in December. And it is that drafting of that legislation will give us a real view as to the first step of how they're going to enact this legislation. And some of the details are being sorted out right now. So next slide, please. The implications of this are significant. When you want to mandate net zero electrification of industries nationwide, this is what the government wants to do. That's going to mean, for example, that folks that are using their own internal power generation to, let's say, work a cement plant or provide the energy for a steel mill or look after their own energy requirements with respect to any kind of heavy industry. They will want and require that be replaced with electrification of those processes, and they will want to see that the power comes from a new facility, one that can a new grid that is very, very energy effective. Effectively, what this will do is it will require gas-fired power generation with carbon capture to be done and deployed on a major scale. And deploying intermittent renewables requires dispatchable gas-fired baseload and peaker capacity. To be able, in other words, to be able to go through the electrification of industries nationwide, you're going to require gas-fired power generation with carbon capture, and you're going to require gas-fired baseload and peaking capacity. Now, regulating emissions will require and result in a major turnover of power generating assets nationwide. That's just a fact. And effectively, coal-fired generation is effectively eliminated, and uncompetitive and gas-fired power plants will be uncompetitive unless they're using carbon capture. All new gas-fired combined cycle plants will be built with carbon capture and sequestration. There's a strong market expected for new gas-fired peakers with an expected regulated life of 10 to 20 years, depending on what the final time frame is with this clean energy regulation. The implications for Alberta: it is facing right now a growing demand for dispatchable power. 5.7 gigawatts of coal-fired baseload generation is retiring or being repowered. There have been 5 energy emergency alerts in the last 2 years as the market reaches capacity. It's showing already stresses on the system. In 2021, we saw prices over $100. 2022 year to date averaged 147. That's a lot of, these are not sustainable prices that must be able to be kept under control and more regulated. And the way you do that, of course, is increasing the capacity in the system. Okay, so we've also seen these real big spikes where the hourly prices settled over $500, 310 times in 2021. Alberta is unique with major gas reserves and an extensive network of reservoirs for carbon sequestration. Now, implementing and regulating a regime, this is what they've done. They've implemented and regulated a regime for licensed CO2 carbon hub, pipeline infrastructure, and sequestration. Alberta is taking the lead in getting that done. The train has left the station, and they're well underway with doing that. Next slide, please. So folks are aware that we established a company called Kalina Distributed Power to develop our power projects in Alberta. And we've been seeking funding partners to participate in this facility. And of course, our growing portfolio of projects. The smaller scale distributed connected power projects involve simple cycle and also combined cycle power plants with dispatchable power as a foundation to address the intermittent nature of renewables. That's in place. Projects range in size from 20 to 64 megawatts. And of course, the Saddle Hills site is secured with a long-term crown lease. These newer, larger transmission connected projects involve combined cycle integrated with carbon capture and sequestration, and the projects range in size from 200 to 450 megawatts. And we have site control in place at one location, and 3 sites are pending. Next slide, please. At Saddle Hills, we will be deploying a phased deployment strategy in light of what we're hearing with the government right now. We are permitted to construct up to 64 megawatts in combined cycle. What we want to make sure is the project aligns with the goals of the federal and provincial legislation. And what that means is a phasing strategy, which we believe will accelerate the deployment and reduce the risk of this project. Initially, what we want to do in phase 1 is deploy a simple cycle, single gas turbine, a Siemens SG600 gas turbine doing 22 megawatts. And we just wish to deploy one single gas turbine in simple cycle peaker mode. We will consider adding the combined cycle integrated with carbon capture and storage as legislative and commercial circumstances warrant. We're not going to presume to know the timelines on that, because I think the details will get better spelled out for us in this legislation. And as we come to better understand it, we will consider how we will go to make this project conform with these new regulations. The fact of the matter is that in simple cycle peaker mode, the project is ready for funding now. So we are soliciting project financing for a phased deployment strategy, and details from this clean electricity regulation, which are expected in December. Those are going to be taken into account because they may have a direct impact on the plant size, configuration, and regulated commercial life of the project. And we can get into more detail as it's required. But in simplest terms, we need to understand whether the regulations will apply to a project of this size. If it does or if it doesn't, will there be obligations associated with developing this project that require us to go to carbon capture? We don't know yet. And we also want to understand whether the timelines will apply to a peaker over what period, et cetera. Next slide, please. And of course, at Saddle Hills, we have some commercial arrangements in place, which are of the highest caliber, and they're there for us all to look at: Siemens, Baker Hughes, Power Engineers, and of course, Enerflex. Next slide, please. To give you an idea of what the numbers look like for Saddle Hills, if we had Saddle Hills up and running today as a single peaker plant, and had it been operating over the last 23 months, here's what the results would be on an annualized EBITDA. In 2021, would have been running at about 51% of the time. The EBITDA would have been about $9 million. We're already seeing these spikes and increases in cost of electricity in 2022, running with a capacity factor of 49%. Before, the EBITDA would have been about $14 million. So this is a very, very fast way to be making money in a hurry, and perhaps the most rapid way that we can actually be making money as a company is to deploy a peaker and get ourselves to be commercial as quickly as we can. I believe the next slide takes us to the section for Stephen. I'm sorry, for Jeffrey. And Jeffrey, I'm going to turn it over to you. Thank you.
Yeah, thanks, Russ. And good day to all. I'm going to talk a little bit in more detail about the Alberta program, the transmission connected power projects with carbon capture and storage. I think the best way to summarize this is that the evolution of reducing fossil emissions has been for a great realization here over the last several years that we're not going to get there with wind and solar and batteries, and there has to be a change. There has to be some way to keep industry going and keep vital elements going like the electrical grid, and that answer is carbon capture and storage. So we think it represents a very large and emerging market opportunity. It certainly, from a political standpoint, from a technology standpoint, from a market standpoint, there are many developments underway in Canada and the US, and this will be a critical part of net zero strategies for emitters. The oil and gas industry, and we think with increasing demand in power generation, those industries, the nexus of the two of them, including the fact that in the areas where oil and gas is produced, you have the reservoirs to sequester carbon, that'll be a significant factor to drive growth in that marketplace as well. And certainly power generation, simply as Ross noted, because you need that power generation on the grid to keep the lights on in critical times. Renewables can't do that. We think that power generation will be a large driver of growth here. I think fossil fuel power plants certainly generate a lot of CO2 emissions. CO2 is lower in natural gas, but there's still a certain percentage. It's less than 10% of that stacked gas and CO2 that can be mitigated, and the technology is out there to, in fact, provide that mitigation. Thanks. On to the next slide, Alex, please. So what we've done over a period of time here, we've got a very experienced team. We've got a team like myself and Stephen that have been around a lot of large infrastructure projects, a lot of large power projects. We saw an opportunity to develop gas-fired combined cycle projects integrated with carbon capture and storage. Our projects range in size from 200 to 450 megawatts. That driver of project size is driven by the triangulation that I'll talk about in a moment about how we select our sites and finding what I would call kind of the mama bear size that will enable us to get into business on an efficient basis and not have projects that are too large and will get bogged down in regulation and transmission interconnect expansion and so on. The CapEx net of the investment tax credit for each project, Canadian dollars ranging from 700 million for the lower end, the 200 megawatt, to 1.3 billion for the higher end. We will capture our 95% of the carbon dioxide generated and then sequester that in approved licensed reservoirs. We will have to verify that our CO2 goes in the reservoir and stays there. There are processes to do that. These projects align beautifully with Alberta emissions regulation and certainly the Canadian Clean Electricity Regulation, which is very aggressive in looking to shut down all fossil generation in Canada by 2035. In the process of doing this, in the process of sequestration, we're producing multi-products. We're producing power. We also generate net emissions credits that can be monetized and can be traded. And I'll talk a little bit about how we commercialize as we go through here. So back to how, as developers, what have we done? What do we do? We have found sites, and there are not many sites that will meet these requirements in Alberta. We've found sites that have a viable electrical interconnect. And by that, I mean that we can interconnect to the grid without any major transmission expansion. So we have specialized consultants that do this work for us. We interface with the grid operator, and we've determined that we can interconnect at the locations that we've established. The same goes for gas supply. The Innova gas transmission system is the backbone of the natural gas industry, transmission industry in Alberta. That system is full. But we have found locations where we can interconnect with the volumes that we need without major expansions, major multi-year expansions on the Nova system. Third, and very importantly, we have found locations that are adjacent to carbon sequestration infrastructure. There are existing CO2 pipelines, there are two of them in Alberta. One of our sites is adjacent to one of them. Other sites are adjacent to reservoir capacity that is in the process of being licensed by a number of different operators. There are probably around 20 different carbon sequestration projects driving forward in Alberta at this point in time, and so we're adjacent to a few of those, in addition to the existing pipeline. We've made pretty good progress on site control. We've got sites under control at one location. We've got 3 others in negotiation right now. Again, the idea is to set these up as long-dated options. We probably will not push all of them forward in parallel. That will depend on the commercial response to what we're selling. But certainly we want to get going on the initial site here in the near term. I think I mentioned gas supply, electrical interconnect, CO2 were all in progress, well developed, and generally speaking, targeting 3 sites in service for 2027. I mean, that will depend on the commercial response as we go forward here. Go on to the next slide, please. So this is a rendering of the plant. I won't spend a lot of time on this. The power plant is on the left side of the picture. You basically have a gas turbine proven kit from Siemens, GE, or Mitsubishi. Those are the 3 major players remaining in the world, and they all guarantee what they sell. They all make hundreds of these units. On the back end of that, there's a heat recovery steam generator. We produce steam. We run a steam turbine. Part of the heat does go across the fence line to the post-combustion capture plant, or what we call the PCC unit. This is a plant that acts very much like a natural gas processing plant does. It has amines, different solutions of amines that are in trays that will are designed to grab CO2 out of the stacked gas, and then you can see a large column called an absorber on the right-hand side, and then on to by pipeline onto reservoir for sequestration. The right-hand side of the picture has been designed and has been proven for quite some time. It really hasn't come into the windscreen in terms of being built in a lot of locations because the incentives haven't been there for it. I mean, all of those incentives that Ross mentioned have come fairly recently, or coming in different ways in different countries, but are now there and now can support the package that you see here on the screen with robust returns. Next slide, please. So here's our business model. Very simply, we're the developer. We expect to earn a cash development fee of approximately 4%. All of this will be negotiated with investors as we attract equity to the projects. We do expect to get a carried equity interest in the project above that investor's minimum threshold return. And we'd like to see some co-investment rights as well. And we'll just have to see how much, whether it's prudent and how opportunistic it is for Kalina to invest direct equity in these projects as well. We've started, obviously, our projects are in Alberta. We've started focusing on natural gas producers. Natural gas producers have a very nice nexus of possibilities that they can put their natural gas through this plant and create power at a very good value, and they're getting emissions-free power to offset their power use in the province. Many of these producers are involved in carbon capture and storage, so that's a nice nexus for them as well. And these producers currently are long on cash flow. They're in the oil and gas business. They've enjoyed some pretty good prices in the last couple of years, and that will likely continue. And we've already seen evidence of this, that some of the producers will be interested in making the equity investment as well. I mentioned Ross mentioned some of the providers on Saddle Hills. This plant is no different. Again, we've got GE and Mitsubishi in addition to Siemens. Post-combustion carbon capture, Mitsubishi is the only one of the 3 gas turbine power equipment manufacturers that have a post-combustion carbon capture solution, but we have some very large names like Shell and Fluor, and I think possibly Baker Hughes as well, that can provide that solution. We will need to partner with EPC firms that are capable of delivering multi-billion-dollar projects. There are a number of them out there that I have worked with. I'm working currently on some other projects with some of these firms, and we won't have any difficulty in that regard. Project development costs for this entire portfolio are approximately Canadian dollars, $100 million. We will be very prudent about this. We will select strategic partners to participate in development funding. It is not out of the realm of the possible that a gas turbine manufacturer participates in development funding or an EPC firm. So we will, again, carefully manage this, and the scope and timing of that project development will be dependent on the level of support, funding support from partners. And we obviously have to be prudent about Kalina's money. We will be leaning on those partners to bankroll, the lion's share of the development for each one of these projects. Although on the 200 megawatt level, we might be able to carry that a little further ourselves. Next slide, please. And we are back over to Ross.
Thank you, Jeff. Just in conclusion, I trust that it's evident that you can see that we've been taking steps to respond to the legislative and regulatory changes which are afoot here in Canada, just at really an unprecedented level. And there's much for us to take in and absorb as it relates in the near term for Saddle Hills. And we see a path forward with the peaker plant as being a good example of that. It's in market demand for peaking capacity right now and for the foreseeable future. And how we would deploy the balance of that plant will be somewhat, we'd have to be mindful of how these regulatory changes unfold in terms of whether it's an opportunity or an obligation, and we'll sort that out in the near term. But more importantly, for us to be right there in the province, watching all of this take place right on our doorstep, the province responding to these regulatory changes and legislative moves by the federal government, and watching what other companies are doing. It's been right in front of us. We've been seeing it, and we've decided to take action. That's what we're doing, and we are really regarded right now as one of the front movers in the province of Alberta because we have taken steps to respond. And we've been able to do that by leveraging the talents of this team. It really is quite an exceptional team. You've heard from Stephen and you've heard from Jeff, and you just know by nature of their backgrounds and what they've done with multi-billion-dollar projects throughout the world, frankly, that you have to understand that we have a team that should be able to be leveraged to take advantage of a very near-term commercial opportunity. And it's not just something on a small scale. This is something on a massive scale, as you can just tell from the numbers that we've been discussing earlier. We want our shareholders to understand that this is a capital-light business model that Jeff was talking about as project developers. We're not in the business of raising money and putting our capital at risk to develop a billion-dollar project. That's not the nature of the game. The nature of the game is for us to properly deploy in a very cost-effective way our capital that can be leveraged with that being contributed by others, so that we can in fact realize on these opportunities and participate with huge upside. It is fair to say, and it's clear, that right now we are attracting commercial and strategic interest for the portfolio of these larger projects. The business activity that we're seeing is evidence of that, and that has given us the reason and the confidence to feel comfortable coming forward to the market and letting the market know, hey, we are very confident that we can get these projects away in one form or another, just given the level of interest and the level of engagement that we are seeing with the activity that is underway in Alberta at the moment. It's always there at the back of our minds that we must keep in mind that our reason for doing this, we may do this for the next several years, and this may represent a significant major windfall for the company. But at the end of the day, we would still argue that the reason we're doing this is to establish a profitable business in Alberta that will serve as a platform to deploy the Kalina cycle to international markets and become a major player in what will be a multi-billion-dollar opportunity. So we are looking forward to, by the way, having another seminar or another webinar in the near future. We would like to talk about some of the implications of this legislation, both here in Canada and in the United States, and how we also see it affecting the deployment of the Kalina cycle technologies and where our focus on the Kalina cycle technologies will take us. With that, I'll turn it over to back over to Alex as our moderator, and as I understand, we'll have some questions to go through.
Thanks, Ross. Yeah, we have had a couple of questions come through. Firstly, Ross, Stephen, Jeffrey, really appreciate you guys taking the time to present for us today. Now, Ross, the first one I'll address to you if I can. Now, the Biden administration has committed something like $320 billion to invest in clean energy technologies. Are you assessing ways to access this given our, the planned Klamath Hills geothermal project in the US?
Yeah, Alex, if I can be very brief on this, there is two parts of this, and one part that we will cover in our upcoming further webinar as it relates to the areas of focus that the Kalina technology is going to be targeted to take advantage of some of that initiatives that are underway, both in Canada and the United States, by the way. But specifically as it relates to Klamath Hills, in fact, Klamath Hills is being reconstituted in part because of this movement here, and the idea there is to just do one thing and one thing only right at this stage of the game, is scope out the size of the resource, which we've largely done, and then establish what the value of the carbon offsets would be in a market and how fungible that market is, because that is in fact why we're keen to move Klamath Hills forward. So there'll be more to report on in Klamath Hills certainly in the coming months.
Okay, thanks, Ross. So can you just confirm if Saddle Hills is a high priority and will proceed, and what are the next steps there?
Well, first of all, we can never confirm that something absolutely will proceed, but what I can tell you is that Saddle Hills is absolutely a high priority. As I think we tried to allude to in the previous conversation here, going forward as a single peaker with Saddle Hill starting off as a single peaker is absolutely a viable path to establishing that project as a commercial project. How far we go with it, how many multiples of gas turbines we use, whether or not we go to a combined cycle using the Kalina cycle, whether we are required to have to use carbon capture in that configuration, those things remain uncertain as the clean electricity regulation makes more clear. We'll have a better understanding as to how that looks. But in the meantime, our plans are to proceed and see if we can finance that project with just a single peaker configuration to start getting into making money as quickly as we can.
So Ross, is there certainty that funding will be secured? And if so, when will this be announced? And how many entities have been shortlisted? And further to that, are Baker Hughes and or Siemens one of the companies that could ultimately provide financing for Saddle Hills?
Well, Alex, as I just mentioned, there's never any certainty until you've got it all done and it's all wrapped up. I don't mind actually telling and letting folks know that even in our earlier 64 megawatt configuration that we had previously, Siemens Financial, which is not Siemens Energy, but rather Siemens Financial, whose business it is to provide project funding and financing, have given us indications of support for a funding of debt on Saddle Hills, which was quite attractive, frankly. So we have every reason to think that we'll go back to them and review the opportunity for a single peaker in that configuration. But that would be our intention to do. So Baker Hughes is not in the business, and they do not have an arm of their business that provides project financing. But Siemens absolutely does, and we've been engaged with Siemens all along on this.
Thanks, Ross. Now, Stephen, I might address this one to you if I can. What type of strategic partners would have an interest in these large power projects with carbon capture projects, and why?
Well, as I think Jeff Myers commented when he was going through those projects, but generally we see three very broad groups that would be interested as equity investors. Firstly, large infrastructure investors. These are the likes of big pension plans, and there are a number of them in Canada as well as international infrastructure investors. We've had some interest from some of those as we've talked to them. They also own some of the existing infrastructure, the CO2 pipelines and those sorts of parts of the business. Jeff mentioned strategic gas producers, natural gas producers. We've seen some interest on the part of them in terms of investing in a project like this to monetize their gas production and in the power space. And the third broad area is the large strategic power consumers who are looking for low emissions or no emissions power to run their industrial businesses. So those three broad groups.
Thanks, Stephen. Jeff, I might bring you in here if I can. Could you just give us some idea of the characteristics that potential CCS sites must have?
I think touched on that in the presentation. I mean, the absolute necessities are access to the transmission grid without expansion, both for gas and power, because these expansions can take many, many years to line up, and reasonable access to a reservoir that is either active in sequestering CO2, and that could be attached to an existing pipeline. Alberta Carbon Trunk Line is one example of an existing pipeline moving CO2 that we have access to, or a reservoir that is actively under development by a player in the carbon capture and storage business. This has been a government process so far. The players involved in carbon capture had to go to the government, get approved for a particular geographic area, and then they would develop the reservoir for carbon capture. And some of those folks are like already in the field drilling exploratory wells on some of those opportunities. And that, again, that's in addition to the existing infrastructure that exists. So triangulating those three levels of infrastructure, that's kind of the first layer. The second layer, gets into, the fundamentals of permitting a site. And, there's a lot of industry out there in Alberta. We don't expect a tremendous amount of difficulty or pushback, but we do recognize the need, and Julia Siglione will lead this for us. We do recognize the need to actively manage that.
Thanks, Jeff. Now, you've referenced 4 potential CCS sites. Is this likely to expand? And are you also looking at sites in the USA?
Well, 4 sites is obviously a pretty big program. One of them is at that 200 megawatt size level. The rest are larger at, $1.7 billion per project. So those are our ambitions at this time. And frankly, I'm not sure how many sites one would find in Alberta that meet the requirements that I just mentioned on interconnects without expansion. The potential for this absolutely exists in the U.S. We've not gone there yet. We need to get this program underway, and we really do think that Alberta, if you look at the power grid in Alberta and a lot of thermal generation being run in the grid inefficiently today, the potential to replace it with more efficient and emissions-free generation is really significant.
Now, Jeff, can you just step us through likely developments from here with respect to CCS? For instance, what's the time frame to KPO announcing its first site?
I think that will depend on our partnering process, and in 2 ways. Our partnering with the original equipment manufacturers and potential development funding from them, and then also partnering, again, we've already seen interest from some natural gas producers that might be interested in an investment as well. We've talked to some other counterparties that might be interested in just taking the power and the carbon offsets and providing a fixed payment. So we need to get through that next commercialization phase, and hopefully we'll have more news in the first half of 2023 in terms of moving our first site along.
So, Jeff, with respect to this CCS opportunity that you've outlined in your presentation today, these are clearly big project opportunities and large capex. Why and how is Kalina the catalyst for such large opportunities with much larger potential project partners? Or simply put, why are they dealing with Kalina?
Well, Kalina is a developer, and we have spent a fair amount of time on this. We do believe that we're a first mover. We don't think there are a lot of other folks out there in this business. We think we've got some great sites tied up. Frankly, I see a lot of large energy projects with some of my other affiliations, like the Stonepeak Infrastructure folks. And I mean, there are a lot of these larger projects that are driven by very experienced and entrepreneurial teams in the early days, and that's exactly what we're doing.
Thanks, Jeff. Now, Stephen, I'll go back to you if I can. Of the sectors that Kalina is engaged in, which is most likely to generate a profit for KPO?
Well, I think all of the above are expected to be profitable. We wouldn't be investing our money if we didn't expect to earn a profit. But in the short term, I think the Alberta projects, as I said, the development fees from these projects, the carried interest, and those types of returns that would come back to Kalina. We're trying to run a capital light program here, so not a large investor of capital itself into the projects, but earning those fees, those development fees. In the longer term, the sale and implementation of the cleaner technologies, the weight recovery technologies, and as Ross said, he'll be coming back to new shareholders and interested parties sometime in the next quarter, talking about the cleaner technologies and where we can be developing and implementing those technologies and how we'll be profitable for the company from doing that.
And Stephen, how might one attempt to value a company like Kalina that has a strong vision and plan but isn't producing revenue, let alone profit?
Well, I think you'd look at two distinct buckets of value. The first is the value that's inherent in the portfolio of patents and know-how that is around the Kalina technologies, and that has some real value. And the second area is the development fees and trying to discount the value, discounted cash flow value for the development fees. The development fees on these 4 projects that Jeff outlined here are substantial. And just 4%, you can do the math of somewhere around $1 billion to $1.5 billion a project. Those are substantial development fees, and so that's how I would look at putting a value around the cleaner company today.
Thanks, Stephen. Now, Ross, a couple more to finish if we can. If fossil fuel assets must physically abate emissions or shut down post 2035, will gas-fired plants with a Kalina cycle attached to them also be required to shut down? It appears that Kalina alone won't physically abate all emissions, so is it possible for them to do it?
Well, that's absolutely correct, and that's even though the Kalina cycle attached to a gas turbine is a very highly efficient, process, it is still defined as a combined cycle process, and that is one of the implications that is held that we need to properly understand. So if you were to build a gas turbine with a Kalina cycle on the back end of it, projects of that nature without any abatement by 2035 will be required to shut down. That is their current plan. Now, they may extend the timelines on that, and we will have to see, or they may say that projects as small as what we're doing at Saddle Hills aren't covered with that regulation. But as of right now, that's the uncertainty factor that we need to better understand, which is why the phased approach seems to work for us, which is to make money with Saddle Hills as a peaker initially, and take into account the regulatory and commercial questions as they get answered.
Thanks, Ross. And just finally, just to finish, as we enter 2023, what are the company's near-term milestones that shareholders can expect to, or at least keep an eye on over the next sort of 6 to 12 months?
Well, we sure have an awful lot here. I'm excited about this next webinar that we're going to have, in which we do to talk about a lot of the Kalina cycle applications and how we are focusing those applications to address the markets that are being driven by these legislative and regulatory changes, because they are quite exciting. So we're looking forward to updating the market as far as that is concerned. There are some other activities that we are also involved with the Kalina cycle that are underway, which we're hoping will advance further and be able to be in a position to announce about that. And of course, there's a host of potential announcements here and real commercial, near-term commercial activities that we hope to be in a position to come forward with as it relates to what you've heard today. Each of these projects, as we cement and get site control in each one of these, and as we go through and complete our competitive bidding process that is underway with these major players competing for our business, I think something we just need to emphasize on this. These are major international companies bidding on our business, on our projects in Alberta. And they're there because they know of our team, they know of our capability, and they are taking this very seriously. And they know that we have line of sight on several projects, that this is very real. The fact that we are engaged with major, and I'm talking major gas companies and major infrastructure players in the province of Alberta around discussing how they might get involved with our projects is, again, a reflection of the talent of the team and the reality of where we stand today with the projects which we do have in development. So I think there's an awful lot to report on in the coming year. And I think there's an awful lot that we're looking to be able to comment in the very near term, including the first quarter of next year. We're very excited.
Fantastic. Look, that's all the time we have today. Thank you all for joining me. And I'd also like to thank Stephen, Ross and Jeff for presenting and taking the time to answer some questions. As I mentioned before, a recording of the webinar will be on Kalina's website and social media platforms later today. That wraps it up for us here. Thank you, everyone. Have a great day.
Thanks, Alex.